Hello everybody, welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are 3 things to pay attention to for the upcoming trading week. Now before we dive into these 3 things, I hope that you had a nice trade last week with that crude oil. We were talking about that breakout with the OPEC meetings. It had a nice move to the upside, and it's still moving. The earnings side was kind of boring last week, which you know what? It's very boring this week as well, so let's start there. 199 companies reporting this week. On Monday, we start off with Marvell Technologies. On Tuesday, we have Casey's General Store, and then one that most people will be excitedly watching, GameStop. Oh yes, the meme stock, which just does not stop and keeps going up. We'll see what happens after earnings on Tuesday. Wednesday brings you Campbell's Soup. Will the COVID quarantine lockdown soup consumption benefit Campbell's? We'll see on Wednesday. Thursday brings us Adobe, Dave & Buster's, and my German Shepherd anxiously awaiting the earnings of Chewy on Thursday. Friday, we've got nothing. Now, let's look at inflation. This is a major one. Over the past couple weeks on this program, we've talked about inflation, why it's starting to rise, and why it may be a concern for our markets going forward. Now, this week, specifically on a Thursday morning at 8:30 Eastern Standard Time, we have Consumer Price Index coming out. Remember, Consumer Price Index is what you and I pay for a specific basket of goods and services. Now, there's 2 different readings of this. There's the CPI, which says everything, and then there is Core CPI, which strips out food and energy. Now, you would think those are probably some of the most volatile ones right now, right? Well, you'd be surprised. Let's take a peek at this chart to really drive this concept home. You'll notice that going back to 2000, this is 20 years, over 20 years of data, we've remained fairly flat with only one little blip above this red line. Call that red line our ceiling for the last 20 years. What's interesting is what's happened in the last reading of this. Keep your eye on the hard red edge and you'll see a line slowly growing up, eclipsing the red line, and all of a sudden, even higher, up to 0.9%. That is a massive spike in inflation in our previous reading. And as we've seen, steel, lumber, lots of commodities are soaring right now, which may bump this number up even further. Now, why is this of concern? Because this is something that's not only impacting the United States, as you're hearing our central bankers and Federal Reserve talk about in their announcements, but it's also starting to hit international markets. Now, why did I say that? Well, because our third element here is interest rates. Yes, there are 2 big announcements happening this week with regards to interest rates, and that's first, the Bank of Canada. Their rate statement is Wednesday at 10 a.m. Eastern Standard Time, and they're expected to stay at 25 basis points. You also have the ECB, or European Central Bank. Their main refinance rate will be coming out Thursday at 7:45 in the morning. That's supposed to stay right around 0, at least that's the expectation. Now, there isn't any real excitement about maybe raising or lowering rates from those central banks. To me, it's more about how are they talking about inflation and how it's hitting their markets. Because clearly it's hitting the United States market. And of course, steel and lumber and these types of things, they're traded all over the world. It will impact those markets as well. Now, if you look at things from a technical perspective, we've been looking at the Bank of Canada or the Canadian dollar really just traversing sideways, rather boring from a technical perspective. If you look at the euro, though, we've got a beautiful double top formation, and the dollar is right in an area of demand, which can present some trading opportunities for those that know how to trade Forex. That, my friends, is your Monday Morning Must Knows. We'll see you next week.